Hi everyone, hope you're all doing well, and today I'm talking about why I sold this stock last week. So I sold this stock out for an 80% gain. It got to that a lot quicker than what I thought it was going to do. Obviously, with the year that we've had in 2020, the market conditions have definitely helped this stock and also me as an investor as well. But I'll kind of talk about why I sold this stock, which this stock is, and everything like that. So hopefully, even though you might not have any interest into the actual stock, the tips that I give you might help you if you're in a similar situation. So if you could, smash the like button. If you are new, make sure you subscribe. If you do want to know when I'm buying and selling companies like this one, make sure you join my patrons group. Link is in the description. We'll get stuck into the video. So first of all, I guess everyone's kind of like wondering, what stock is it? So I sold my shares in Revolve and I sold them out for an 80% gain. And I've kind of had only this company for just coming up to a year really. So not a long time, when normally I hold stocks for 2 to 5 years. But like I say, when you've had such a quick gain since about the COVID lows, it definitely does help you. So yeah, that situation has helped absolutely huge. And I am going to say, like, even though I've sold my shares in this company, and I know other people do sometimes buy and sell when I do myself, hopefully you do your own research into them and not just bank on me, but if you do hold this company, like, I don't blame you if you're still wanting to hold it. I'm still a fan of the company. I'm just kind of, when I go through all this situation, you probably understand my point of view with it. So yeah, so first of all, why did I sell out? So I always like to think about a game plan. So every time I buy a company, I always I've got a book which actually has all my stocks in, and it has like the bull case for it, points why it's going to go up, and then I always put like a target price of like where I'd be happy to sell that company, and that's when I buy the company. And that kind of always puts me in the mindset of where I was at a few months ago or a few years ago, and I'm like, right, how much has these bull factors played into it? And like, if I was back there and I knew this scenario, would I take the profit? And it always keeps me in check, because sometimes when your stock goes up 80, 100, 200%, sometimes you get a little bit carried away and you're like, oh, I don't want to sell. Like I've talked about before, it's like you get these green eyes where you like looking at your gains, but that's not really profit until it's sold. And sometimes, like, you can get in a scenario where you're like, you don't want to, it's a bit of FOMO. You think like, what happens if the stock goes up another 50%, 100%? And sometimes that can happen. Like if the company's in a good position and there's so much more upside, like you won't sell out of that. I can understand that. Companies that I think have so much potential, I still hold the shares of. And sometimes you got to consider that, but at the same time, you've also got to be thinking about, right, let's not get too carried away. How much realistic upside is it? And for me, this sort of valuation is near where I thought the company was going to get to. And this was in 2 years' time. So I was kind of looking at this scenario right now of thinking, it's a little bit shorter than what I wanted, but realistically, them gains I've had in like just under a year are a lot. And I wanted to take them off the table. So the first thing is like sticking to my game plan when I bought the stock. This is pretty much near the valuation where I thought it would be in 2 years' time, never mind a year's time. So that was one thing, my game plan that I had in place. Next up was my position size. So for me, Revolve wasn't a huge company in my portfolio. I think it was actually the smallest or the second smallest in my portfolio, not considering any new positions that I've started off in the last month. So yeah, as a position size, as a company that I've kind of fully built and was leaving now, it was still a small position. I didn't ever have a lot of money into it. And I know people, it's a joke we always have on the Discord, is like, I wish I bought more. And I kind of do wish I bought more, but at the same time, the position size for me is when I looked into it, my portfolio is always getting bigger and bigger and bigger. And as I do, a lot of companies, the longer I hold them companies, the value of new companies overtakes them, and this was going down and down. And I was looking at it going, well, for the position size I have in this company, is it worth me managing this position, keeping up to it? And I was like, not really. Like, it's not anywhere near the size of Tattoo Chef. It's not anywhere near the size of Microsoft, any of the companies like that. It was, for the hours that I have to put in on like keeping up to date with the company, reading earnings reports, I was like, for an 80% gain, I'm willing to take it, because for me, the position size as well it's not one of my core holdings. It's not a company that I ever saw myself holding for a 5 year, for example. I just realised it was a good company at cheap prices. So the position size came into play as well with this company. Next up, and the last point, is how much upside does the company have left? And also, is there a better stock to put my money into? So I always want to, especially at the moment, I want to keep a decent cash pile. So I don't want to tap into that too much. But at the same time, I am looking for other opportunities. It's just a lot harder at the moment. That's the key thing. And I was looking at this company, I was like, right, how much upside does Revolve have? Now, when I started buying this company, Revolve was sitting at like an 18 forward PE or something like that. The company is now at something like a 45 forward PE ratio, I believe it is. I'll probably put the actual P ratio on this video, but it's definitely gone up a lot since I started buying it. It's gone from a teens forward PE into, you know, a higher P ratio. And I was like, well, that's not as attractive of what it once was. And I also looked at the company, and sure, the company it's a great company. You know, the revenue is growing fantastic on it, the profit's growing fantastic on it. But I was looking and thinking, well, the profit's going to grow at 10% rate. So realistically, if the profit's growing at 10% rate, that forward PE isn't going to drop as much as, say, another company. So I was like, that forward PE isn't going to come down on valuation. So we are trading pretty much at like probably about 2 years ahead of where the company is at. So I was like, the company definitely has more upside, but in the next kind of 2 years, probably like 30-40% maybe. And I was like, it's not a huge amount, especially when I took the other factors in place as well. So I was thinking, it's still at a pretty decent valuation here. It's definitely not cheap. It's probably getting past a little bit past fair value now. So I was thinking, there's not, I mean, you know, you never know. Earnings could come out and it absolutely kills it and it goes up huge. You know, you never know. That can always happen in the stock market, but I've got to try and keep a level head. So yeah, I mean, I was thinking not as much upside in it. And then I'm thinking, well, if I do sell, I don't want money to sit on the sidelines. I want it to go somewhere. And I was looking and I'm thinking, well, this was on the day as well when Alibaba dropped. And I was like, I like Alibaba. I really like it. It's a company that I'm already invested in. It's at very cheap prices. It will be a massive company, diverse. It's outgrowing Revolve as well. I've pretty attractive valuation. You know, this Alibaba was back in like the forward teen range. I think it's like an 18 forward P or something. And I was like, this is attractive. And I was like, shall I take that money from Revolve? Can I put it back into Alibaba? And I was thinking that sort of situation, as well as some other companies that I might, you know, tap into as well. But I know there was like a few other drops going on in the stock market as well. So I was thinking, I can go use that money now into another company where I'm looking at Alibaba and I think, Alibaba has the potential to 100% in the next 2 years. Now, I think that it could be somewhere a bit longer, but I think Alibaba will outperform Revolve in the next few years. So I'm thinking, well, that's definitely attractive. So I was thinking there's a better opportunity out there as well. So when I've put all these into one place, I was like, yeah, that makes sense to sell it. But nevertheless, I still think it's a great company. I'm just happy to take some profit off the table. And then with that new company that I've pretty much, well, from Revolve, I've doubled my money. I can now go buy a big stake in another company as well. And then hopefully that can go double once again. So hopefully that helped you as well with like not just a Revolve point of view, but also selling stocks point of view. I hope that helped as well. And there were some useful tips in there. So I hope you enjoyed it. If you could, smash the like button. If you are new, if you could subscribe as well, that'd be absolutely amazing. And I'll see you in the next video.